Hi, everyone. Thanks for joining community call number 4 here with the 1inch Network DAO. Just going to wait for a couple more people to roll in here. Have some very cool guests today, so I'm excited about this one.
GM, everyone. Looking forward to this call.
Matt, how's it going down there in Consensus?
Good so far. It's been a really good event, large turnout. I think there's probably at least 10 to 15,000 people that showed up.
Wow.
Yeah, I'd say it's like similar size to East Denver.
Okay.
Yeah, a lot of good connections down here.
Cool. I'm going to hit 1inch Network news real fast, give some people time to roll in here. Probably the biggest thing is 1inch Network turned 3 years old last month. Seems young, but it's kind of a grandpa in the DeFi community. We hit total volume of 170 billion on Ethereum network, and we have some conference work going on. So I met a lot of you guys at Permissionless in Florida last month. It was very cool meeting you all. We had a good booth there. Very cool conference. Consensus is going on right now. I couldn't make that one, but we have a lot of people from the 1inch team, core contributor team there. So I think Tanner's there, Matt's there, Gleb, and Nikita also. I don't know if there's anyone else from the team. You might be able to speak better on that, Matt or Tanner.
Yeah, we have a pretty small crew here. But yeah, we have a couple of our events team members here also. Yeah, kind of small representation, but we're getting out there and meeting a lot of people.
Cool. On the governance side, so 1inch IP07 passed the final vote, and balancer boosted pools are now integrated into the aggregation protocol, which is very cool. 1inch IP05, the derivative aggregation addition to the 1inch network, that's actually been started now. So users can pool into Opium options protocols now through the 1inch Earn app. Got some other news. So 1inch now can be used, 1inch the token can now be used to purchase travel packages on Travala. 1inch launched an NFT for people who've swapped over 10K on the Ethereum network. 1inch Foundation heard your guys' feedback regarding the gas program, and it's been extended for an additional 10 million 1inch. So hopefully that lasts a few more months. And then the Layer 3 contest wrapped up recently, and the top 3 governance proposals each received 201-inch. I thought it went really well. Got a lot of cool new contributors into the DAO. So yeah, it's something I'd personally like to continue doing. So feel free to drop any suggestions you guys have for future Layer 3 ideas into the chat. We can discuss those. Just a reminder to use the community calls chat, text chat up there to post any comments or questions. Let me move the guests in here now also. I'm going to do some introductions. So most of you guys know me. I'm Round Elephant Jordan. I do community governance here at 1inch. We have Trader Snow. Matt, you want to introduce yourself?
Hey, everyone. Yeah, my name's Matt, and I'm on the support team and the community team. Yeah, kind of do a little bit of everything. And yeah, I've been in crypto for about 3+ years now. Yeah, fun working on this team.
Yeah, and my name's Tanner, and I am a developer here and also work on community as well.
Cool. Thank you. Joao.
Hey guys, thanks for having me. I'm Joao Reginatto. I'm with Circle. I have been with Circle for about 7 years now. I work on the product team over there. I was the original product manager for, for USDC, for US dollar coin, which is our digital dollar product, our stable coin. We can talk more about it later. And today I work on all things stable coins for Circle.
Awesome. Thank you so much for joining, Joao. Let's move over to the Overnight.fi team. Max or Andrew?
Yeah, hi, I'm Maxim Ermilov. I'm the founder of Overnight Finance. We're producing a stablecoin called USD Plus. We call ourselves USDC that pays you yield via daily rebates. We're of course much smaller than USDC, but very honored and proud to be here, in such a company and next to Joao in particular, and in front of the respected community of 1inch.
Hey, this is Andrew from Overnight Finance. I'm leading the marketing team here at Overnight. I'm also on Consensus, so hopefully Tanner will meet some point. Yesterday we couldn't make it. Super honored to be here on this stage with all these great speakers. So yeah, let's get going.
Cool, thank you. And just a reminder to all the speakers, we do record this call and we post on YouTube afterwards. So if any of the audience members don't want their voice recorded, you can just drop your comments or questions in the text chat and we can read them off for you. Let's move on to what a stablecoin actually is. How do they work? I'm going to kick that question over to you, Joao. You seem to be the expert. I don't know anyone else who's been in this industry for 5 years, let alone 7. So
Yeah, for sure. Yeah, stablecoins are a super interesting concept, right? Because I think, and I'll follow with a little bit of a story of how we eventually got to stablecoins here at Circle. But just as a matter of concept, I think most people will be familiar these days who are in crypto with the concept of stablecoins. But the idea is, how can you bring, the concept of fiat currencies that people are much more familiar with on a day-to-day basis, the dollar, the euro, the British pound, the Japanese yen, all these currencies that people have grown accustomed to in their own regions. How do you bring those to kind of blockchain rails, right? Because there's tremendous amount of value in Bitcoin, in the innovation that it had introduced, and subsequently then with Ethereum and with the ability to kind of, more or less easily create your own digital asset and allow that to perform the quality properties that you're interested in. But there was still always a gap for some use cases in the price volatility that is associated with most crypto assets, and how for some use cases and for some share of users, it's just too hard for them to cross that gap and say, I am willing to kind of buy a cup of coffee with Bitcoin, or I'm willing to kind of receive my salary on ETH. Like there's a large chunk of use cases where the volatility involved in those assets doesn't really cut it for some customers. And so the idea of stablecoins is, what if we actually continue to benefit from the quality properties of blockchain rails, the global aspect of it, the permissionless innovation side of things, how fast settlement they produce, and cheap cost of transacting, but bring the currencies that people are more familiar with to that infrastructure. So there are many different ways to kind of achieve that goal. Usually it has to do with what people call the pegging mechanism, right? Essentially, you have to build a crypto asset that has to peg its value to an external asset, like the dollar, like the euro, as I said. There are different ways to achieve that. USDC achieves that in a particular way. There are many different ways, particularly if you want to.
So how does USDC actually maintain that peg compared to an algorithmic stablecoin like UST, or maybe a crypto collateralized coin like DAO? DAI, sorry. I'd like to hear your explanation of how each of those things work.
Right. So USDC uses, I think, the simplest model, perhaps from a design point of view, but also one that is super hard to operate, which is a fully asset collateralization model. And in particular, the assets that we choose are dollars, because they're the easiest thing to map to the actual value that you want to peg to. So the mechanism that we have built is very simple. So we don't mint, we as issuers, Circle as issuer, we don't mint USDC at all unless if it is for customer demand. So what happens first is that a customer brings a certain amount of dollars to Circle. They deposit that with a Circle account. We then observe the settlement of those dollars. We separate those dollars out into what's called a reserve mechanism, and then we mint the associated amount of USDC. So if a customer transfers $1 million to Circle, we observe that settlement, we mint on demand 1 million USDC tokens, and we give that to the customer. And we keep those $1 million in reserve, because the most important part of this mechanism is actually the redemption side, right? Is getting people to trust that all of these tokens can be redeemed at any point in time. So when customers come to us with, again, 1 million USDC and they say, we want to get the dollars back, we just draw down the dollars on reserve and we hand that back to customers. So it's a fully collateralized model with the dollars.
So are these customers anyone? Could I go and do that? Is it anyone with I know I personally redeemed USDC using my Coinbase, but I'm not sure if I'm actually interacting directly with Circle there, or if Coinbase is the middleman.
Yeah, that's a good point. A lot of people misunderstand that. So let me touch a little bit on that. When we launched USDC back in 2018, Circle actually built a service that was catering for both individual and business users, right? So we actually had a service that anyone could create an account and they could transfer dollars from their bank account, all over the world. We supported 80 plus countries. And we also supported businesses doing that. So there was a phase between 2018, 2019, and the beginning of 2020 that we supported individuals. Over time, though, with the type of asset that USDC has evolved into, which is, we're going to talk about that, but the scale is quite tremendous today, right? It has $53+ billion in circulation, and we have some business customers who do mint and redeem USDC with us at tremendous scale, and it's just super hard for you to build systems that cater well for those business needs, but also cater well for the John Doe on the street who just wants to mint 100. So we ended up retiring. Yeah, we ended up retiring the support for individuals. We also did that because we thought at the time, this was, as I said, it was in the beginning of 2020. We thought that there was enough on and off ramps out there, provided by other companies that would cater better for the retail market. So when you go to Coinbase, with Coinbase or with any other service, it works a little bit different, right? So those companies, what they have is they have a stock of USDC, right? So they have USDC there ready for you to buy. So if you have an account with them and you deposit $100, they will trade that for 100 USDC for us. Coinbase and a lot of these other companies in the ecosystem actually usually have an account with Circle. So they imagine that it's the difference between retail and the scale volume. So they behind the scenes, they are minting and redeeming USDC at scale with Circle then. And today for Circle at least, we only support business customers.
Okay. So you're saying it was just, I guess, on the back end and everything, or maybe even regarding regulations, it's just easier to do stuff in big chunks for you now rather than big chunks and little me redeeming 100 USDC for $100 in my Coinbase account.
Yeah, I wouldn't say it's necessarily easier to deal with businesses. It's very different to deal with businesses and the needs that they have, and then also deal with consumers. So we felt that we had to make a choice which segment we could serve better, and we ended up going with businesses because we also have this focus that we see USDC as actually more than just the bare assets that it is that people can hold and spend. We see it actually as a platform, right? And I think 1inch is a good example. You can build a lot of innovation on blockchain, and you fundamentally need most of the time a digital dollar solution. So USDC is being integrated in thousands and thousands of applications these days. And, we feel that also serving those applications as a business, thinking about that as a business, as a team of developers, also makes sense for us. So around about 2020, as I said, we started having that focus instead.
So I got a question for you that I hear a lot on, I guess, crypto, Twitter, Reddit. How do users actually know that Circle has sufficient collateral backing the USD price or USDC price? Have you guys released, I guess, proof of reserves or audits?
Yeah, so that's a key part of such a model, right? If you go with the full collateralization model, there's a couple of things that are super important for you to ensure so that people can trust fundamentally on that mechanism. One is the redeemability, right? So I think we're super proud to what I believe have the most redeemable dollar currency in the world right now. We literally redeem billions of dollars every week. And just to give you a figure, like in 2021 alone, we have redeemed $61 billion for our customers. Some people get confused and they say, well, how come have you redeemed $61 billion if the supply is only 53 now? Because USDC actually has a lot of churn, right? USDC is the digital currency that has the most churn in the market, exactly because it is so redeemable. So it's so interesting now as we have come into this bear market. USDC is almost like an index for crypto, at least in the US. The supply going down means that a lot of people are selling crypto assets into USDC eventually to redeem into dollars, maybe to keep cash or maybe to pay taxes, all those things. So we mint and redeem a lot every week. I think so that redeemability is a key component of making sure that people trust the mechanism. The other one, as you said, though, is just demonstrating that you actually have full reserves, right? So there's a couple of different ways to do that. We have issued monthly attestations since September 2018, every month, nonstop since we launched. Attested by Grant Thornton, which is the top kind of accounting firm in the U.S. We have also been audited. We are audited every year. Auditing is a lot of people also say this, right? Why can't you provide an audit? Well, audits are very, very comprehensive mechanisms. They test all of your controls. So companies typically do that once a year. We do that once a year. We have actually publicized those as part of our S4 filing with the SEC. So, there are public links out there that people can find the last two audits that Circle has gone through.
I had one more question for you. So how does this differ from UST? I know it just happened last month, the whole Terra Luna implosion. What happened there? Can something like that happen with USDC, or what's the difference between USDC and an algorithmic stablecoin? I guess I'm trying to get at.
Yeah, I think even algorithmic stablecoins, they also don't come equal, right? For example, DAI is a very different currency compared to what UST was, and they're both algorithmic. It mostly has to do with collateralization, right? So DAI, for example, it is an algorithm mechanism nobody controls. It's all written on, but it is collateralized, right? It involves like these loan mechanisms where people actually have to post collateral, and it's actually over collateralized, which I think it's a great model. UST was algorithmic in nature, but it actually didn't have collateral, right? It was based on a mechanism, on a cyclical mechanism with the Terra token, and so that mechanism is just has particular risks that make it very complicated. I think for now nobody has figured out a way to make it work. One of those mechanisms, they tend to work when there is strong demand on the minting side. I mean, in a bull market in particular, they mostly work. But all it takes is for some fear to be there in the market and some redemption pressure to exist. And the cyclical nature between the stablecoin asset and the synthetic asset that is used for providing value for that, it just can easily incur in these death spirals. I think we have seen that with multiple stablecoins using that mechanism today. USD was certainly the one that grew the most and scaled the fastest, but eventually it also suffered from this mechanism. USDC is very, very different. I mean, it has different risks, but it most certainly would not have a similar fate, because if there was, for whatever reason, some lack of trust all of a sudden on USDC, that would cause people to try and have a run for it. First of all, typically the run on the crypto capital venues, right, on centralized or decentralized exchanges, there's a lot of pressure for people trying to sell USDC. That would typically force the price down under $1. We have, as I said, we serve businesses, and amongst those businesses, we serve all market makers and liquidity providers you can imagine in the market. They certainly understand how redeemable USDC is, and they would profit a lot from arbitrating on that price change. But even if that happens for a sustained amount of time and it actually causes people to try and redeem all of their USDC, we have, and we prove by our attestations, we have 100%, actually a little bit more than 100% collateralization. We can provide for full redemption of every single USDC if it ever comes to that. So I think it's a very different mechanism for that.
Okay, I understand. So you're saying a death spiral can't happen because you're actually collateralized with proper US dollars, right?
That's right.
Fully collateralized. Okay, cool. I think we're running out of time, not totally, but just for this segment. I think we got to kick it over to Overnight.fi with the USD Plus team. Are you going to stick around, Joao? I'm sure the community might have some questions after this in the interruption.
Yeah,
Thank
absolutely.
you very much. That'd be awesome. Hi, Max.
Hey, very good.
Very cool. So I just know a little bit about USD Plus. I saw you guys posted in the governance forums a couple times talking about maybe it being a way that the 1-inch DAO treasury can vest a lot of its USDC it holds in order to earn a kind of trust minimized yield there. Can you describe a little more about your project?
Yeah, so as I said, we call USD plus USDC, which pays you yield. The mechanism which we have behind USD plus is very similar to USDC. So as Joao just explained, USDC is linked to US dollar. You can mint and redeem USDC with $1, and there is full redeemability. There is 100% reserve behind USDC, which is probably invested across some very liquid assets, and there is some yield which Circle kind of generates from that reserve and keeps. I'm going to make it a little bit I'm going to tease a little bit just to make this discussion a little bit more interesting. So the way USD Plus works is exactly the same, but we are pegged to USDC. So with one USDC, you can always mint one USD Plus, and you can always redeem one USD Plus for one USDC. So there is this full redeemability, exactly like in case of USDC. Then our reserve is constituted not of fiat assets, not like US treasuries or whatever, like repo, which probably colleagues are keeping, like commercial paper. Our collateral is constituted of liquid DeFi assets. So this is lending on things like Aave.
Okay.
Also,
so it's all on chain. Everyone can view your assets there.
But most importantly, it's exactly like USDC. So it's fully redeemable. So at any point in time, we can take this collateral on chain and convert that into USDC. So if you come and you want your, I don't know, $10 million back, you click one button and you get your $10 million in USDC on chain with one click of a button. So there's this full redeemability. Why? Because the collateral is constituted of DeFi assets, which are generating yield. The big difference with USDC in this case is that we pay you yield. So because our collateral is generating yield and we are not retaining it, we are kind of passing this over to our holders of USD Plus via rebase on each day. So typically, you would like on 10,000 USDC, you would generate on 10,000 you would generate $2 every day, and you would receive it in the form of rebase. So we stay 100% collateralized. Whenever we get a little bit more over collateralized because the collateral is generating profit, we'll pass it over to the USD Plus users.
Very cool. So how are you actually, I guess, earning this yield? I should say. How are you doing that? Is it in a trust minimized fashion? Are users handing over the USDC to you guys and trusting you with it, or?
So there is we don't run any treasury, so it's all on chain. So there's a bunch of contracts, like so-called investment strategies, which can be voted upon to be rotated as the market situation changes. But the idea is that once you mint USD Plus with your USDC, that USDC gets invested via smart contracts in a trustless way into a number of strategies which we had predefined. And as I said, the strategies include lending, so things like Aave, but also they include like zero and permanent loss strategies on stable to stable pools. Like we would run an exposure to USDC, USDT pools and USDC DAI pools. But we always mark to market our positions. So like we always measure the value of the collateral in USDC. So like for us, USDT and DAI are extremely reliable stable coins, but they're not one-to-one to USDC. So we will kind of measure that. And that's how the yield is generated.
Cool. So are there risks associated with these yields, or?
Well, of course, there are risks associated with these yields. One is that, whenever we run no impermanent loss yield fund, like liquidity provision strategies on DEXs, USDT fluctuates to USDC. And it fluctuates a lot, actually, because like it can fluctuate like 4 or 5 basis points, like sometimes 6, 7. During UST, it fluctuated much more. But when you pay people kind of 2 basis points per day, so like as I said, $2 on 10,000, those fluctuations of 6, 7 basis points are actually very significant. So there is that fluctuation, like I would say currency risk, which is small and tolerable, and we manage that, but that it's there. And obviously, USDC runs no smart contract risks, and that's a big difference. And why, to be fully honest, USDC is more reliable because USD Plus would have some smart contract risk on top of, in addition to.
But that's just with basically everything DeFi, really. If you add more complexity to it, add more smart contracts, there's always some latent risks with each layer you add there, right?
Absolutely, yes.
cool. Are you guys audited or?
Yes, we are fully audited, and we want kind of to get a few more audits. So we are audited by Hacking, and as the new VC round comes, we will probably get audited more. But I think there's also an interesting thing is that all our collateral is on chain, and the emission of USD Plus is also on chain. So we publish it on our site in a very transparent manner, kind of what assets we own, what's their mark to market, what's their liquidation value. So we'll disclose all that. But if you really want to go and verify, you can verify like every second. You can just sit there and see, if one USD Plus really has one USDC of value behind it at any point in time. And this is all available on chain, and this can be audited like, if you wish, it can be audited like 24 times a day.
Wow. Very cool. I want to touch on something you said earlier. You said if you change, or there's a vote when people change, or when you guys change the yield strategy, right? Is that a DAO voting, or is that your core contributor team voting?
At the moment, because we are a relatively young company.
Just how young are you? Can you tell us real fast?
Sorry?
How young is the company? Sorry to interrupt.
I had this idea like roughly a year ago, but we started getting the team like end of August, September last year.
Oh, wow.
Yeah. And we raised at the end of December, early January. First money came in end of December. We closed around end of January. So we are currently on Polygon chain and expanding to AVAX, probably Phantom. We have already kind of achieved the top 3 decentralized application on Polygon chain by
Awesome.
turnover. We are number 3 behind USDC and Vmatic, most traded token on Dystopia chain. I'm really hoping that 1inch adds Dystopia to its protocol, and then
just to give the audience some sorry to interrupt you. Just want to give the audience some context there. So USD Plus is mostly on this decentralized exchange Dystopia, on Polygon, correct?
Correct. Yes.
And 1inch right now is working to integrate that into our aggregation protocol there. So it's not quite integrated yet, but it should be within the next week or 2.
Yeah, can't wait. Well, it's available on 1inch via QuickSwap, but liquidity on QuickSwap makes less commercial sense than on Dystopia. But so as soon as the UST crisis has happened, there was a flood of people who used to be very pro-risk and who have turned very risk-averse. And our product is extremely risk-averse. So it's fully collateralized. We don't like risk. We minimize everything. And suddenly people started liking this. And so ever since UST, I think our TVL has grown 5 times. So we spoke with Natalia recently. We were like,
okay. So that's interesting. So when the whole market was crashing, when people were de-risking with the UST, they saw that the yields that people were saying were too good to be true actually were too good to be true with that Luna stablecoin. Mm-hmm. People moved over to Overnight.fi.
Well, I'm not saying that we are digesting the entire volume of UST.
Yeah. Obviously not
but we are having huge inflow of customers, and suddenly people like the product. I remember when we just started this, I was pitching to some investors and some potential high volume customers, and I was asked a lot, who would buy your product at that time yielding like 14-15%, when you can buy UST, put it into Anchor and get 20. I mean, nobody will buy your product. And I would just try to make the point that, algorithmics are more risky, and there are scenarios under which it can depeg, and people would laugh. And suddenly people are kind of coming back and kind of starting using, USD Plus as a way to go through crypto. And really, you look at our graph, it's flat. We were building, flat in terms of revenue. And then suddenly 10th of May comes, and starting 21st of May, there is like explosion of USD Plus customers and volume. It's like the hockey stick in real world ever since then.
A hockey stick. Yeah, I've noticed it's kind of hard to articulate risk to people without a specific example to point to. If you're looking at UST and say that's an algorithmic stable coin, it could have a death spiral and become worthless. People are going to, like you said, laugh at you if they're making 20% a year and they've only seen up. but
Yeah.
I guess the chickens come home to roost.
Yeah, unfortunately for many people, and I mean, a lot of my good friends have lost a lot of money over there. So I'm sorry for that, and I actually don't think that's good for the industry. But on the other hand, fundamentally, there are no returns without risks. So sooner or later, that comes to mind.
This kind of actually brings up another question that I've had for Overnight. Are you guys working on any sort of like insurance, like whether third party, like something like Nexus or in-house insurance, as far as mitigating risk in that area?
Yeah, absolutely. So it's funny because I like to describe ourselves as like the least risk in DeFi. So we really try we cannot be risk free, but I try to prove that USD Plus is really kind of minimum risk possible. That's kind of our positioning. And customers who really like USD Plus, they all ask for insurance, like more or less everybody. So we are trying to negotiate insurance with a few companies. We need to get to some critical size, but that's really big part of on the agenda. But also when we kind of prepare a public sale of our governance token, which has not been issued. And by the way, all the growth so far has been zero marketing spend, no rewards, no nothing, just growing by itself more or less. So we will issue our governance token, which will be used in insurance. We will be able to use our governance token OVN to deposit into insurance fund along with some other valuable assets, maybe ETH, Matic, USDC. So that insurance fund will generate some return for those who deposit and lock, but at the same time, it will provide kind of insurance against negative rebase. And so people who kind of put their skin in the game, kind of a little bit like capital in traditional banks. People who put skin in the game, who will be afraid of losing the money they have locked in USD Plus. To ensure USD Plus, only them will get the right to vote, because on the strategies which go into the USD Plus. Because what we need to make sure that people kind of stay risk averse when they choose the strategies.
That's very interesting.
Like the Aves, right? That's how Aave does insurance.
Sorry?
That model for insurance is pretty similar to Aves, right? To use like the native token to kind of back the underlying.
Probably, yes. I'm not yet familiar very much with their model, but it sounds very, very much like it, yes. So if there's negative rebase, then own token. But I think the important difference is that will not be just our governance token. It will be our governance token and the liquid assets. Because I just want to make sure, because just our governance token, people will start comparing with algorithmics. Like what is
I
it?
guess I'm kind of thinking of the maker model then, where it's DAI is backed by USDC and Ether, but if it really loses its peg, maker is the backstop there. Well, I guess not lose its peg, but if it becomes under collateralized.
Yeah, or maybe coming back to USDC, there is this regulatory trend that some stablecoins need to get banking licenses, and I think USDC are ahead of the world actually on this dimension. And so a banking license implies that you need to put up capital, which is there kind of to insure you against the situations where you lose some money in your reserves and you become under collateralized, and the banking capital is there to prove that. You can also think of the insurance like the banking capital which Circle is providing to back up USDC.
So let's kick it over to some questions from the community there.
We have one person raising their hand in the chat. I can bring
all right. Yeah.
Hey, how are you?
Good. How are you, Matt?
Good. I wanted to ask Max about the element of taxable events on the essential airdrop of the rewards. If it's on like a 24-hour epoch, how does that work, and have you taken that into consideration at all?
Yeah, Matt, thank you very much. I'm not American, and so I was not aware of tax implications, which our daily rebase implies. So actually, one of the biggest asks we have had so far was to develop a wrapper similar to compounds around USD Plus, so that people kind of have it optimized for tax purposes. So that's very high on our development agenda list, to develop that wrapper so that daily yield gets passed to you in a tax efficient way.
Okay, cool. I also had one more question in regard to the governance token. I wanted to ask, I think it's very realistic nowadays to be transparent as far as a protocol, to say kind of where your profits are coming from and kind of keep a full like on-chain transparency of where the protocol is actually making money. I was curious, are you profiting essentially from a performance fee or anything like that? Because I'm just curious on how it works on like a daily basis as far as calculating with your APY.
Yeah.
Because the project is great, fantastic, but I just want to always know how the more the consumer knows that how you're making money, the better, because then we have more trust in the protocol.
Yeah, so that's absolutely, appropriate question. And, we have described it in the docs, and let me repeat it. So eventually, we will charge 0.5% on TVL per year. So like every day, we will charge 0.5% divided by 365. That's a number which is actually very small. So on every million, that's like 5,000 per year. And that's why we're not charging it at this point in time. So maybe once we exceed like 100 million TVL, then we start charging it, because then it will be like 500,000 per year. So it will be meaningful. Before that, you just get everything. And we just focused on the growth at the moment. And our key, our model is, I like to joke, and sorry about all this fiat kind of parallels, but I like to joke that SEC actually invented stablecoins, because they kind of put a lot of pressure on stablecoins, disclose this, disclose that. They don't differentiate between algorithmics and collateralized. But it's funny that they have invented stablecoins, because in traditional world, there is this thing called money market funds, which by regulation of SEC have to follow this NAV of 1 policy. So every unit of the money market fund has to be $1 by regulation. And they regulate like what put in reserve, and like that you need to pay out profit every day. And that's like $5.2 trillion asset class in the US. And so that's what USD Plus is. It's like a stable coin which kind of generates yield. And as money market funds charge like a small fee on TVL, on the management, we do exactly the same. It's going to be very cheap product for you to manage your spare liquidity, and but it will be profitable and kind of very profitable for us only once it becomes very big. So once we start counting TVL in billions, like, I don't know, maybe we reach 10% of USDC emission at some point in time, 5 billion, then it becomes like 25 million revenue. That becomes interesting. And then the 0.5% suddenly is a lot of money. So that's our goal. That's what we want to achieve. And that's why it doesn't make sense to charge it yet, but it will make sense to charge it at a later stage. But the business model is exactly that of money market funds.
Okay, that makes sense. I mean, your protocol really just relies a lot on the total protocol value. But I guess my question is that if you have a governance token, is there no profit share of the yield earned by the protocol with the governance token holders? Is the governance token only for voting, and is it only for insurance?
So first of all, insurance will generate fees. So it will actually generate premiums, because people who want to insure will have to, share part of the yield to pay for the insurance. So that will generate premium first. And second, part of the fees will go probably to buy out OVMs and burn OVMs from the market, but only part of that. But we are pretty far from that. We wanted actually to issue our governance token as soon as possible, as always. But in today's market, I don't think it's the right thing to do. We are able to grow, as I said, without rewards. We're able to grow really, really fast without spending on marketing. It's all naturally product driven. So I think with issuing our governance token, we can wait a little bit until, wider adoption of USD Plus and better market situation. So all the details, I think I will disclose later, but at the moment we want to share the fees and direct some of the fees to buy back OVM.
So essentially, the when you were mentioning a seed round before, are you talking about just a pre-sale of governance tokens? I just don't see how there's value given. I mean, I understand the value of the protocol, but given right now it's fairly low. So where is the investment aspect come in as far as seeding Overnight?
Oh, we are seeded by VCs. So we got VC funding from a number of investors, and I think I hope we will be able to at some point we are very well funded at the moment, And so we can afford kind of not yet generate revenue. We can afford not yet to issue the government token until the market improves.
Thank you very much for the time, and I'm really
Thank you.
interested, and I
Those are
look forward to
awesome
seeing your total value growing.
Thank you.
Thank you very much, Matt. Very good questions. I had one from Joao from actually the text chat here. Let me get back to it. It was Bruce. He's asking about USDC's ability to block specific wallets and is asking if it's safe for the 1-inch DAO to hold it in the DeFi treasury in the event that like the US bans stablecoins. I guess you would probably have a pretty good sense of where stablecoins stand in the eyes of the US government.
Yeah, no, happy to answer that. I will not speculate on things that are outside of my control. You know, whether the US will ban stablecoins or not. I think you guys can all assess the likelihood of that happening. But specifically on the stuff that is concrete on the block listing capability that we have for USDC. Yeah, when we were designing USDC, we did that in conjunction with a lot of people in the industry, with a lot of people in the crypto industry, but also with a lot of folks in the banking industry, and we collaborated with regulators as well. And the block listing mechanism was something that a lot of people mentioned to us that they would feel more comfortable with an asset like this had that sort of capability. However, and it is actually linked from the web page on circle.com/USDC. You guys can, I think, find somewhere in there a link to the Center Consortium, which is the consortium that governs the standards behind USDC. And then there's a policy that we have that's very clear and public online as well about block listing. It's a very, very high bar. To date, I think up until last year, only a couple $1 million have ever been block listed. I think it was around $2.5 million alongside, I think 38 addresses in all. So, do your own research, check out our stablecoins, check how many addresses and how many dollars they have block listed, and you will see that actually USDC is the one that has done that the least, because the bar is so high. As I said, we require a court order or a sanctions regime indication to effectively apply block listing. We don't do that for friends of friends, for people who have been hacked, for people who have lost funds by a mistaken transaction. Block listing is never used for those kinds of things. And there's actually a provision in the policy that says that if the address that is being requested for block listing is a commingled address, and what we mean by commingled address is, the 1-inch USDC deposit address, or like a deposit address for USDC on like a centralized exchange, obviously it would be very, very problematic to block list one of those things, and we reserve the right to object and fight that request if it ever comes to play. So that's the construct that we have, and we put together that construct exactly to protect the community, right? Because I don't think anybody's interested in like blocking addresses that will cause damage for like a huge number of users. But it is actually interesting for the industry to have a backstop, a mechanism like that to stop illicit activity, which I think, there's a lot of scaremongering about how much illicit activity it happens in crypto, and in an asset like USDC, it's actually quite minimal. But sometimes there is some stuff, and I think it's good for this to exist.
Thank you for clearing that up. I didn't know that the bar was so high, so that's good to know.
So to summarize, you basically have detailed legal documentation whenever you do actually decide to blocklist something?
Yes, absolutely. And as I said, it's primarily due to a court order that Circle or Center have received, or to sanctions instructions. And the OFAC has a list of addresses on multiple blockchains that they are interested in making sure that nobody touches. That those are things that usually have to do with fairly bad activity, whether it is terrorist financing or some level of blocking, for example, the activities that were happening with now that when Russia invaded Ukraine, like all those sorts of things. And, those are pretty bad. You don't want to see your currency kind of supporting that. So OFAC sanctions and court orders are the bar. And I think that's a pretty high bar.
Very cool. Thank you. Any other questions from the community here? Matt or Tanner, do you see any in the text chat?
I actually have a question. Is USDC looking into partnering with projects like Overnight at all, or like looking at any mergers or acquisitions like in that area?
No, I don't think we've ever spoken before, right, Max? But so
Oh, we spoken to your colleague Wyatt.
yeah, that's right. So no, I don't think nothing in like the acquisition side of things for sure. But I think we are obviously interested. I think the most amazing thing for me, having worked on building an instrument like USDC, is to see the innovation and the creativity that people have and how they can expand and compose USDC into other things and create things that are more interesting. I think the innovation that happened with starting with things like Compound and Aave, you have CUSDC, you have AUSDC, like those are super interesting instruments, right? That kind of wrap USDC and provide more utility. I think what you guys are doing with USD Plus is also super interesting. We tend to see ourselves as more of a backbone for all of those things. I think Circle and USDC, we want to be a developer platform. As I said, I think one thing that we still have a long way to go is that there are still too many developers out there in the world building things on top of Stripe, building things on top of Marqeta and Green Dot, and like all that money infrastructure that is built on like the 20th century foundation. People need to be starting building the next Uber, the next Airbnb, the next Robinhood on top of something like USDC, right? You will actually be able to truly build global applications, open applications that benefit from self-custody, from all these things that are going to make our finance world better. So we are super interested in seeing those things happening. Actually, Circle now has a ventures arm called Circle Ventures, where we essentially try to finance, try to invest in companies who are innovating in that space. And we're super interested in collaborating and helping as much as we can that happen.
Yeah, I totally agree. I think we see ourselves enabled, to be fully honest, by USDC. Like a product like ours would not be possible without USDC and being able to peg ourselves to USDC. I also think the industry should move in towards a certain situation where people start differentiating more the term stablecoin, because at the moment it's getting like some negative connotation, but because it mixes a lot of meanings. There are collateralized stablecoins and people talk a lot about USDT being a bad stablecoin because it doesn't have the same level of disclosure like USDC, and I think there is like right discussion there, but it's infinitely better collateralized than algorithmics like UST. And so I think we need to kind of work on the vocabulary to deliver the message to people that there are, collateralized stablecoins like USDC, maybe also USD Plus. There are over-collateralized like CDP stablecoins like MAI, DAI, Liquidity, and like LUSD and some others. And then there are algorithmics and semi-algorithmics, which are a totally different asset class, which has no collateralization. So that's actually very important to start finding different words to call those things rather than stablecoins.
Yeah, that's a good point. It kind of just conflates the distinctions if we just call it all stablecoins. I'm really interested. I guess not interested. I'm just a fan of how much DeFi is kind of building on USDC. Like even a project like DAI, which was initially just backed by Ethereum or Ether. I mean, I think USDC is now the number one collateral backer there of DAI. So I guess I'm just trying to say USDC is kind of just the gold standard right now of collateral backed stablecoins. So it's very cool to have you on the call here, Joao.
Yeah, absolutely. Happy to be here. And I think, there's so many more things that we're planning. Would love to stay in touch with you guys for other plans that we have in the stablecoin space. There's so many more things to grow that, we have to bring this kind of construct to other regions in the world as well. The DeFi is very dollarized. I think we are interested in kind of begin an expansion into other regions and currencies as well. So happy to be here again and happy to keep working with you guys.
Just one last question I have for you. I think I saw USDC is offering, or is it's being issued directly to Polygon also now? Did I see that this week, or am I getting confused?
It's not exactly that. So let me clarify that. So we still don't have a native version of USDC on Polygon. That's the terminology we use whenever we deploy a version of USDC that can get minted and burned directly from dollar reserves. That's what we call a native version. So the version of USDC on Polygon is still the version that you can obtain by bridging your assets from Ethereum layer 1 to Polygon using the Polygon bridge. What we have done though, because there's, I don't remember the number, but I think there's about $1.5 billion worth of USDC on Polygon. So it's very relevant, and there's a lot of very cool companies building on top of USDC on Polygon. I would mention, Stripe is building a payouts product that's going to utilize USDC on Polygon. And I think the Polygon team has been really successful in attracting some Web2 companies to using their infrastructure. So what we started noticing as a need was that, again, these businesses that use Circle to mint and redeem USDC, they wanted a shorter path to getting from dollars to USDC on Polygon. So what we did, just as a solution for now, is that we connected our infrastructure with the Polygon bridge. So what happens is, for our customers now, they have the ability to send us dollars. We mint USDC on Ethereum and we bridge it for them, and we essentially give them USDC on Polygon. But we still rely on the Polygon bridge, and we haven't yet built a native version of USDC. That is in the plans for the future, though.
Thank you. Thanks for clearing that up. Well, I think we should do a last call for questions now, because we're coming up just the last 3 minutes of the call here. So if we don't have anything else,
we do have.
We have some
request to speak. So let me bring them up. FCM, are you still there? Okay.
Like we might have lost them.
Yeah.
All right. Well, I think we'll conclude the call here. Thank you so much for joining, guys. I think it was a great call. Very cool to have you guys both together, especially when both of our projects are kind of building off of USDC a lot.
Thank you for inviting.
Yeah, thanks for having us, and congrats on the 3 years.
Thank you. Thank you.
Cool. And one last thing I want to just say to everyone here is, for those who don't know, we do have a POP for our community calls. To claim those, you need to have been on the call for a little while, and you can't have deafened yourself. That's going to make you eligible through our bot on Discord to actually make the claim. So a couple minutes after the call, you can use the community calls chat or any chat in our Discord and type /claim, and that will give you your redemption code for our community POP call or community call. I'll post.
We want to tell them to click it from the drop down after you do /claim. You can click the command from the drop down. Like if you press enter too fast, it'll just post it as text and it won't actually make the command.
Yeah, exactly. It needs to be a command to the bot. So I'll post a screenshot of that so you guys can see kind of what it looks like in Discord when you're typing it out. And then, yeah, everyone who's been here can get a POP.
Thank you.
Thanks, everyone.
Hope everyone has a good weekend.
Thank you.